Okay, folks, good morning and welcome to Swing Trading Today, this final day of not just April, but of Q1 2021. Thanks for being here. And what we're going to talk about today is an options trade on NUGT, which is a leveraged ETF, putting you long of the gold miners. We already have a position in NUGT, not an options trade, but a long trade, as well as a trade in the GDXJ, which is the junior miners. Now, the reason why I want to go over these names is because they've been beaten to death. And the thing is, I think they're going lower. So I'm going to talk to you about an options trade we're going to be looking to put on here. We're also going to talk about the economic data that is coming out this morning. We're going to talk about some stock chart requests. Pat, if you're out there, I'm going to go over that one symbol you sent me over. And what else? Oh, the futures. That'll help. We're going to go over the futures. I knew I was missing something. All right, so let's get to it. Let's begin with our sponsor, which is TrendSpider. Folks, in this day and age, you need to be automating your technical analysis. We're going into Q2 of 2021. We have space tourism. We have genomics. Now you need automated technical analysis using algorithms similar to what the big guys are using. Your competition right next door, trading out of their basement, living room, dining room, they're using this technology. Trust me. So please automate your grunt work, speed up your technical analysis. At the same time, you improve your accuracy, reduce costly analytical mistakes by setting your alerts. And by using alerts, you time your trades with precision. And you can also scan using they're already built. You don't have to play around. They're already in there. Use their scanners to find winning chart setups. Then set your alerts. They have a 7-day free trial offer. They have a demo tour. They have TrendSpider University. Get a 35% discount below by using my link. It's the cheapest price on the web. I've been doing business with them so long, I get a special discount. So you take advantage of it. I believe in the product so much that I give it away with my silver and gold level memberships. So join now. I have a 14-day free trial offer. Let's get to the morning activity. All right, to kick things off. Yesterday, we had consumer confidence, which came in a lot hotter than expected. So there is a check in the corner of those that believe that the economy is somewhat on the mend. But the way I would look at it as well is that we have inflation, or the threat thereof of inflation. Add to that, the Case-Shiller National Home Price Index rose 11.2%. This is a national price increase. 11.2% versus 10.4% for the January period from last year. So huge pricing gains. So inflation finds a home, whether it be in the stock market, whether it be in the housing market. If the stock market corrects, it's going to go somewhere else. Food prices, energy prices. So while the Federal Reserve is sitting on their accomplishments of managing inflation, if they were using accurate data, then they wouldn't be speaking the truth. So beware of inflation, and also beware of this morning. We had the ADP employment report, which is coming out. The market is expecting 525,000 new jobs. That's versus the prior period of only 117,000 new jobs. And you may say only 117,000 new jobs. Well, when you take a look at the number of job losses we realized last week, 684,000 initial jobless claims, folks, this pales in comparison to this. So net, we continue to hemorrhage jobs in this country. This is not an economy on the mend. Hopefully, the ADP report will come in strong. Initial jobless claims will drop down. Believe me, my heart goes out to these people. And non-farm payrolls, which comes out on Friday, increases dramatically. So a lot of slack in the system. There's a lot of potential here for an upside number. Hopefully we get it. We'll see. Sam, good morning. R-Train, good morning. Good morning, everyone. All right, let's take a look at the gold miners for a moment. And to go over the gold miners, you need to look at the U.S. dollar first. If you don't, it's foolish. So last night on Market Wrap, I figured I'd share this. And this is actually a different view than what I showed last night. Members, if you're watching, it's over in the members area. So right off the bat, I want to say that this is a very bullish chart. But one of the things that keeps me involved with the gold mining trade, apologies for that, the gold mining trade is that 25% of all dollars printed were printed in 2020. Think about it. The dilution of the U.S. dollar was just completely astounding last year. Yet the dollar is at multi-year highs. Why? Well, you have COVID outbreak or increases in Europe. And that's what's really driving the matter with the U.S. dollar. Along with the market's been weak, stock market's been a little bit weak, and you're seeing money segue over into money market accounts. So that's keeping a bid on the U.S. dollar. So if we're diluting the dollars so much, is this rally for real? You can't discount it. I wouldn't out of hand discount it because you have the 50-day moving average in blue rapidly approaching the 200-day. We're above the 200-day. This is a chart that's looking pretty good, but I get the feeling that it's a bull trap. They're luring people into the dollar, out of the euro. They're luring people into stocks and out of gold and out of the gold miners. So with that opinion, I think that we are nearing a resistance level at around 93.50, give or take a couple of bips. So 93.50 on the U.S. dollar basket of currencies, the Dixie. And when you take a look at the dollar bull ETF, which is what we discussed last night, we're looking at a price target of around 25 to 25.30 on the dollar bull ETF. So what's the play here? Well, for us, I already have a long position in the GDXJ, which is the junior miners. That's our investment. We're going to sit with that. Now, what's not really investable are the leveraged ETFs because of time decay. So the trade here for me, I already have a position in the NUGT, not an options trade, but a long trade. The trade here for me is I would like to see another gap down here on the NUGT and watch the implied volatility. For those traders not familiar with IV, go to Investopedia, type in what is implied volatility for options. Basically, the implied volatility for the 30-day option really hasn't changed much. In fact, it's down versus its historical norm. So I'm not getting a big fat premium on 30-day options because I'm looking to sell the option. I'm not looking to buy the option. So I want to be the banker. I want to generate income. So I have my eyes set on, and this is subject to change, the 45 strike going out to either the 23rd of April or the 30th of April. So we're going to try to generate some income, but I need for the implied volatility to expand and or I need this to become more oversold with these Stokes down below 20, a little bit of blood in the streets, fear expands that implied volatility, and then we look to pounce and look to sell premium to generate some passive income. So that's the trade we're looking at. Members, will be sending out an alert as we begin to build this position. We've been very deliberate with not accepting cheap options, not willing to accept a near the money strike price to increase our risk. We want to reduce our risk. We want to go deeper out of the money than the 50s, perhaps down as low as the 45s. Will they be assigned to us? Probably not, because we're using an 80% probability that those options will expire out of the money. We're just looking to scalp some premium, generate some cash flow, have a little bit of fun. So that's a trade du jour. So hopefully we get a gap down. Why do I think we're going to get a gap down? Well, the other day with members, I was talking about the Stokes here. And I warned, this is a beautiful, beautiful reversal bar on the 29th. Man, looking at this and nothing else, this ETF is going up higher. But then I warned, don't get lured in to a false sense of security. That's what they want. Because your stochastics are still declining well above the 20 mark. A lot of damage could still be done here. Beware the bull trap and beware of volume. Volume rolled in very, very low. So this was not a rally day on institutional accumulation. This was mom and pop not paying attention to the charts, buying NUGT, and they had their head handed to them. And they're probably, if history is any guide, they're probably going to have their heads handed to them yet again today if they continue to fight this trend. Now, we sold covered calls on our GDXJ trade, so we're hedging here. And what generally happens when you have Stokes declining, you got to go back in history. Go back here. Here are your stochastics. When you get a gap down, or when you get a move on the Stokes down below the 30 mark, you typically get a gap down. Back here, May, we went below 30, we gapped down. May the 27th. Back here, we moved down below 30, we gapped down on August the 11th. So on and so forth. That's what we're looking for today, is a bloody, bloody day. Even though I'm long, I hope we get it, because that's going to be our opportunity to pounce. Because my expectation is that on that gap down, we're also seeing a gap up higher on the US dollar up and into this upper band of resistance. This may not happen today. It may happen tomorrow. But in all probability, it's going to happen. The pre-market activity is not validating what I'm saying right now. We'll take a look at that in a moment, because we're seeing some weakness on the dollar, bearish price action technically. So we'll talk about that, but we're going to show patience. Maybe the dollar is right in what it's doing in the pre-market. I don't know. I'm not that smart. The market is far smarter than me. It'll dictate what I'm going to do. So with this being said, this is the trade du jour. I can't believe I'm using fancy French words. This early in the morning, no less. All right, so here's the dollar pre-market. And what I mean by technical, it's only down spot 0.9%. Not horrible. But what happened here, and I talk a lot about breakout point failures or bull traps. This is a 4-hour chart. So not a daily chart, but not insignificant. It's certainly not a 15-minute chart. All right, so it's not as volatile. A lot of charts that day traders use. No knock on day traders. Some of the great day traders are out there. I'm not one of them. So my hat's off to the great day traders. So we broke out here yesterday morning above this resistance. Why is this significant? Well, it's significant because you go back on a weekly chart and look at all of this overhead supply here. A ton of sellers that we just barreled through. Back to the 4-hour chart. And what did we do overnight? Well, we flashed a continuation breakout. Very bullish. Believe me, when I went to bed last night seeing these two consolidation bars, I didn't have the warm and fuzzies. Then follow through to the upside. I wasn't up for this, thank God. And then as I woke up this morning, bam, we broke down. This bar is attempting now to recapture support. It won't close until 9 a.m. It looks good thus far, but we have a lot of time between where we're at current and 9 a.m. So if this fades and we take out this prior low, look out below for the U.S. dollar. We could be setting up for a head and shoulders setup. Left shoulder, head, right shoulder, yet to be determined. Neckline at or about 92.6, where these two prior support and resistance levels converge at 92.6. Whew. Let me go to comments. Ricardo, good morning to you, sir. You keep nailing it, Bob. Thank you very much. I appreciate that very much. I was reading Zero Hedge about the Fed getting overwhelmed at the border. Last sentence said maybe the Biden administration would reconsider finishing. I think they're going to court on that, McCarter. I think there's case law out there, and don't quote me. I'm an idiot, right? Especially when it comes down to legal issues, So this is what I've heard. Okay, what I've heard is that there's case law. Fact check me on this. That if a prior Congress and a prior president sign off on legislation, it's not within the purview of the new president to simply stop that legislation. It's been voted in and signed in by a prior Congress and a president. So they're going to go to the Supreme Court with this. I don't think it's going to make it at a federal court, district court. I think it's going to have to go to the Supreme Court. But they may force his hand to complete that wall. And I'm not sure about the Keystone Pipeline. I don't think that was an act of Congress. But, yeah, more to come on that. It's a very valid point. I'm just curious about any implications that roll over into the market. I think it's just a very small job. I don't think it's going to mean much for the market at all, really. Yeah, 94, if we break through 93.50, I mean, sure, we can head up to 94, no doubt about it, on the dollar. I mean, simply come to the weekly chart. Right here would be the extreme at 94.28. The resistance level below that is 94.06. What did you have? 94.14. We're in the ballpark. So, yeah, I would agree. All right, sticking with this dollar trade and the gold trade, I want to take a look at gold in the pre-market. It is now positive, which frankly I didn't want. I wanted it to gap down. I wanted the dollar to gap up. Maybe I'll get it with the ADP report, but I may get denied here. Nice W formation on 4-hour chart of gold, quite bullish. First price target is going to be where we found support back here, but it's failed to hold, and that's going to be at or around 17.19 the ounce. Moving on to equities, I'm wondering if there be more block sales from Friday. I think that's why you're not seeing the futures higher. McCarter, I think that there's a lot of consternation out there about who's got counterparty risk, who's next. So a lot of traders are worried, and it's not even just the counterparty risk aspect. They're also worried about the leverage out there in the market, and the worry that you wake up and you're fine with your margin, then you wake up let me rephrase. You go to sleep one night, the market closes, you got buying power, right? Because the margin requirements are liberal. Then you wake up the next day because the prior day you had a Fed head come out after hours, which happened yesterday, and state that he's worried about market conditions. And then all of a sudden, you have financial institutions who have a herd mentality begin to tighten up on margin requirements. So what was 30% now becomes 40, 50%, etc. That has a huge, huge magnifying effect on the buying power of many traders. So even if they had buying power the day before, they may wake up with a margin call or no buying power whatsoever. So that's what's frightening a lot of traders. That's what I'm hearing anyway. So just beware of that. And then the worst case scenario is that you have more hedge funds out there that could be in trouble as well, especially if they raise those margin requirements. Yeah, I hear you, McCarter. It's crazy. I mean, and he wasn't even trading simple stocks. I mean, he was trading really, he had stocks, but he was trading derivatives as well. So, the problem is when you're trading these derivatives, I'm not sure what derivatives they were, MBS, I have no idea. But when you're trading these derivatives, many times, many times these institutions have no idea what they own. It takes an MIT scientist to figure these goddamn things out. So many of these companies are probably sitting there going, how much of this stuff do we have on our books? So it's all about counterparty risk. Watch the margin requirements. I think that was just one round to fire off. Usually this stuff comes in threes, so beware. I don't think we're done with that. Let's check out equities. The Russell 2000, of which we remain short. Yesterday, we closed here. We held support, but this morning, despite the fact that we're down, we've broken support on a 4-hour time frame. This rising lower band of support. RSI still looks good. So yeah, am I nervous about being short? Yeah. I mean, we're in a wedge formation on a daily time frame. So I'm concerned about a daily breakout. We're short of the NASDAQ 100, which is now positive by over a half percentage point. That was flirting with a breakdown yesterday. I still think it can break down, but the market is going to tell me if I'm right or if I'm wrong. I think I need a new mouse. I think I wore this thing out. Now, what I will point out here on RSI, because I do not speak my book, because if I'm speaking my book, I'm lying to myself. I like to verbalize my positions. And when you see RSI break out, it's concerning. When you see higher lows in RSI, it's concerning as a short. But this bar is not closed yet. We'll see what happens by the open. The Dow is down. That tells me that yields are probably pulling back yet again. Take note of RSI here and price action. We have a lower high. And no lower low yet. But RSI certainly is putting in lower highs and lower lows. So beware the Dow, especially if these are your cyclical names. So they could do well. These are energy stocks, financials. They could do well in a rising interest rate environment. But if yields pull back, money's going to flow into the glorified tech stocks, which are extremely overbought on valuation basis. S&P 500, not looking horrible here. Would I be surprised to see a breakout? I would not. Would I be surprised to see a breakdown? I would not. Watch the lower highs on the RSI and the lower lows. We are in a downtrend channel, 4-hour time frame on RSI. Beware. But the chart overall looks okay. Again, we're not going to talk our book. Silver, which took it on the chin. I think there's opportunity here. I don't know what the implied volatility on the AGQ, which is a leveraged ETF, is. I have to research that. This is a potential short put trade, not a long put. When people hear puts, they think I'm bearish on a stock. I'm actually bullish on silver and gold longer term. So we're looking to take advantage of this pullback. And even names like Newmont. I mean, this is a great stock. Really got clobbered yesterday. So we're going to be looking to take advantage of this pullback fairly soon. You know, the thing to remember here, folks, is that we're heading into a very, very seasonally favorable period of time for the gold miners. So in the back of my mind, I'm also thinking about the seasonality effect. When you go into April, May, June, very, very powerful months for the gold miners over the past, I believe it's 10 years. But hopefully we get one last push down. All right, let's go to chart request. What was Pat's symbol? I should have had this written down. Pat. Pat, if you're on, can you just drop that symbol in? Oh, I got it. L-I-Z-I? L-I-Z-I. Let's use our friends over at TrendSpider again. 35% discount code below, folks. All right. L-I-Z-I. Daily chart looks good. We'll come back to it. Monthly chart is brutal. Oh, this is an ADR, American Depository Receipt. All right, monthly chart. A lot of topping action. 2 sequential months. Not loving that. Weekly chart, very, very interesting. We have pulled back off the highs. Here's the value of the automated trend lines, folks. If you had the automated trend lines, you would have known by having this click of a button here at your disposal. I didn't draw this line. The algorithm did. You would have known. Get out. Book your profits. Get out. And look at the sell-off here. So I think this is a buy because I already know what the daily chart looks like. The weekly chart looks really good. We have broken out here the week of March the 15th. We failed to hold this support level last week, but we bounced back this week with these moving averages here, and one being a volume-weighted moving average. And we have, at current, found support at what resistance is now support yet again. So, very bullish. The caveat, yes, it is still early in the week, 3 trading days left to go, a lot can happen. But then that's where the daily chart comes in. Before I leave the weekly chart and go to the daily chart, watch the breakout here on RSI, bullish, daily chart. So here again was our breakout, pullback retest multiple times yesterday, continuation move up higher on volume. And I don't mean on a daily average, as you're seeing here. We had below average daily volume yesterday. But what I'm looking at is the raindrop chart. And what this tells me, this is a mixture of volume-weighted moving average and candlestick charting. So what this tells me, the right side of the raindrop is the afternoon price action. And when you get a green raindrop with a big fat pregnant belly, that means that there was buying into the close, accumulation. Very bullish. So I think that this goes higher. So LIZI looking strong. The semis, that's a good one to go over. Before I go there, let me just go to the members area. I got to pull out a couple of other symbols. AUPH, bullish. We went over that yesterday afternoon for David. Bullish. David, AUPH. I had mentioned that it's critical to watch for a breakout above resistance. And we got it. I just keep in mind, though, again, the value of the automated trend lines. Take them off, put them on. You're going to have another resistance level right above at around $12.75 per share. So it's looking good. So AUPH, which is a pharma stock, looking good. We'll leave it off with the semis. Weekly chart first. 1 trading day left to go in the month and quarter. We so far have a down month on big volume. So this was a distribution month. And this is the first distribution month on the semis since back here, March of last year. Weekly chart. We're generating higher lows on a weekly time frame, consolidating. We broke out last week on the semis. We pulled back this week and retested the semis. So it appears as though we're probably going to break out here. Daily chart. Now, what the semis need is this. They need a strong continuation breakout day because Friday was a clear institutional accumulation day. Then we pulled back Monday, Tuesday, retesting support. Again, the value of the automated trend lines. Click of a button. Now we're looking for the continuation move up higher on volume. It's got to come on volume. So the semis looking very good as we proceed into the back half of the week on a monthly, not on a monthly, on a weekly and daily time frame. And with that, folks, semi's going to start pumping the market, you think? Possibly. Quite possibly. All right, we'll leave it off with VISL. I don't know this stock that well. We were overbought. We pulled back. Oh, we did. We did go over this stock before. Where did we close? We held support. We've retested support twice. Possible W formation forming. The pivot point or the center of that W is at $4.05. I think this could be bought with a stop right below this support level here at 2.89 daily chart. Yeah, I think this could be bought. I would stay small, then add more aggressively above that 4.05 mark. So it looks pretty good. With that, folks, everybody have a really great and profitable trading day. Join us tomorrow night for Thursday night Stock Charts Live. We'll review the weekly charts. It gives us a glimpse into the following week. So join us. It's a great time. We do stock chart requests. Click the like button, subscribe, enter your email address below to get on our email list. And everybody have, again, a profitable trading day and be well.